Welcome back. I'm Brian Ross in New York. In the wake of the bankruptcy of the solar panel maker Solyndra and the loss of $500 million in taxpayers' money loaned by the Department of Energy, we've taken a closer look at other so-called startup green companies that have received similar loans in a joint investigation with the Center for Public Integrity. And in particular, 2 electric car startup companies that in total represent a $1 billion bet with taxpayer money. These are cars the Obama administration says represent the future of the American road.
They're sleek and expensive. This is the Karma, a $96,000 half-electric, half-gas car. The creation of famed European auto designer Henrik Fisker.
Well, it's a very, very good-looking, sexy car. And
the first Fisker car off the line went to Leonardo DiCaprio. The other startup cars backed with taxpayer money come from Tesla, all electric. Its roadster cost $109,000, and its celebrity champions include Arnold Schwarzenegger and George Clooney. But beyond the hype and the cool are serious questions about whether the $1 billion of taxpayer money the Obama administration has invested in electric car startups are worth the risk. It is a major goal of the president.
We can break our dependence on oil with biofuels and become the first country to have 1 million electric vehicles on the road by 2050.
In the case of the Fisker car, it was only last week that the first 40 of them were delivered, 2 years behind schedule, with Fisker himself giving Nightline a first look.
It almost looks like a supercar, even though it's a 4-door sedan. And the price is just under $100,000.
Expensive.
It's expensive, but it's got 400 horsepower.
It's a luxury ride, but the range on battery power is only 32 miles, according to the EPA, although Fisker maintains it's closer to 52 miles. Fisker says the car's style makes it different than other green cars.
We want people to get excited emotionally about an environmental friendly car.
The decision by the Department of Energy to give Fisker a $500 million plus loan came with the promise that it would produce a smaller version car in Delaware, creating 2,500 jobs in Vice President Biden's home state.
This is seed money that will return back to the American consumer in billions and billions and billions of dollars in good new jobs.
But so far, the only cars being made have come off the line at this plant in Finland, something the U.S. government knew would be the case when the loan was approved. Fisker says while the company makes sure it only spends its taxpayer money in the U.S., it could not find any affordable place in the U.S. to assemble its first line of cars.
We're not in the business of failing, we're in the business of winning, so we make the right decision for the business.
That's why you went to Finland.
That's why I went to Finland.
The company says it already employs 700 designers and engineers in the U.S. The decision to assemble the car in Finland was not received well by auto workers we talked with at an Occupy Detroit rally last week.
The work should be done here, not in Finland.
Now Republicans in Congress are questioning why the Department of Energy approved the loan in the first place, knowing in advance Fisker would assemble his first cars in Finland, not the U.S.
I think when Department of Energy found out they couldn't do it in America, that was time to pull the plug.
As to the other electric car startup getting huge taxpayer dollars, Tesla, almost another $500 million, it plans to build 20,000 vehicles a year at a plant it bought in California, now being prepared for production to start next year. Tesla's future depends on the success of this car, a family sedan called the Model S, being seen here for the first time in Tesla video from a test track. Priced at around $57,000, it too is styled to compete with luxury cars like the BMW and Mercedes.
While expensive, there is a very robust market.
But these are cars for wealthy Americans, not for average Americans.
Well, I don't know how you define wealthy.
Tesla Vice President Dermot O'Connell says the car will revolutionize automaking.
This is the battery.
The mother of all batteries.
This is the mother of all batteries.
Its big flat battery that goes under the car provides a range of almost 300 miles before needing a charge. But some industry analysts, including the auto columnist at Fortune magazine, say Tesla's business plan doesn't work.
The numbers just don't work, Brian. I think unless Tesla gets some more cash, they're going to be in bad shape.
In fact, in Tesla's most recent filing with the Securities Exchange Commission, ABC News and the Center for Public Integrity found this statement, that the company expects continuing losses for at least the foreseeable future.
If you don't make a profit, how will you repay the loan?
But we will make a profit. That's the plan, and we're executing to it.
Despite what you've said to the Securities Exchange Commission.
despite what we've said to the Securities Exchange Commission.
The bottom line is that such startup companies are inherently, by their nature, risky business. Nothing's guaranteed other than the fact that there will be winners and there will be losers. Joining me now to discuss this story is Matt Mosk, part of our ABC News investigative team out of Washington, who's led our investigative efforts. Matt, what do you make about this fact that these are, by their nature, risky investments? So what's the big deal?
Well, Brian, this is really new for federal government to essentially get into the venture capital game. And you're right, it's extremely high risk. Some 80% of these investments are likely to fail. And the question is there the political will to support something like this if the cause is good? And President Obama said in his State of the Union address, the goal is to get more electric cars on the road. And so they're investing money to see if that can happen.
When private investors put their money in, they may not win every time, but when they do hit one, it hits big. What's the return for the federal government if one of these investments turn out to be very successful?
Well, the return for the federal government is more electric cars on the road. There's no financial win for the government. So really what they're doing is they're saying we're going to put $1 billion plus into these electric car companies, and we're going to hope that they hit it big. If they fail, the government is out a considerable amount of money. If they win, the government doesn't reap any financial benefit, but they reap the policy benefit of seeing more electric cars on the road.
This has become a very partisan issue, with Democrats now saying that the investigation into some of these loans should be expanded to loans made under the Bush administration. Tell me more about that, Matt.
Right. Well, where this started was with the failure of the solar energy company Solyndra. Congress impaneled hearings. They've subpoenaed documents from the White House. And what they're showing is there was really internal disputes over how much money should be invested and whether these investments were wise. What the Democrats on the House are saying is, let's look back at the Bush administration. They issued loans to startup companies. Let's see how those have done.
And in both cases, are politics at play? In other words, were people who were supporters of the Bush administration getting loans over Democrats and vice versa in this administration?
Well, really, that's the big question. There's a policy, there can be a policy disagreement over whether or not investments of this sort are a good idea for the federal government. But the real question is, when they were picking the companies that were going to get the federal money, was there political influence involved? And that's really what Congress wants to look at.
And so far, with our investigation with the Center for Public Integrity, what would you say is the bottom line answer to that question?
Well, I think what we know is that the companies that were picked do have strong political ties. We looked at Fisker and Tesla, two startup auto companies competing among 90 or 100 other companies to get this money. And these companies, Fisker and Tesla, both had strong ties to the Obama administration. We're talking about people involved in the president's fundraising. Even former Vice President Al Gore sits on the board of the venture capital firm that has staked the company Tesla. So there are ties. The question is, was influence used in order for these companies to get picked?
Matt Mosk, thank you very much. And of course, the White House has denied there was any political influence involved in any of the decisions. We'll be staying on this story and others at abcnews.com. Just click on the investigative tab. That's where you can also send a tip to our investigative team if you know of something that you think needs a closer look. And for up-to-the-minute breaking news headlines, you can follow me and the ABC News investigative team on Facebook and Twitter. That's all the time we have for today. Thanks for watching. I'm Brian Ross in New York.